Hello, I'm Damian from DAGO Express. Many companies assume they're 100% protected if goods are damaged during road freight transport. Unfortunately, that's not the case. Liability is capped, and that can leave you carrying a large part of the loss yourself. If this affects your business, take a moment to like this video, share it with your team, and subscribe for practical insights on transport, liability, and risk management. Because the biggest mistakes don't happen when damage occurs. They happen much earlier, when responsibilities and liability limits aren't clearly understood. So let's start with the fundamentals. Who is actually liable for what? First, the haulier. As the haulier, you're responsible for the goods while they're in your custody. You must make sure they're transported safely and delivered on time and in good condition. Next, the freight forwarder. A freight forwarder is responsible for organizing the transport. But if a subcontracted haulier is used, the forwarder can still be held liable to the customer as if they were the carrier and subject to the same liability limits. Now let's talk about liability limits in the UK. In the UK, liability is usually governed by RHA or Logistics UK conditions. Under standard RHA terms, liability is limited to £1,300 per ton. That's £1.30 per kilogram. What does that mean in practice? If you transport 100 kilograms of goods, your compensation may be limited to just £130, even if the goods are worth several thousand. That gap is where many businesses get caught out. So when does the liability limit not apply? Only in cases of willful misconduct or gross negligence. If a haulier acts recklessly or intentionally, liability may become unlimited, but proving this is difficult in practice. Can liability be increased? Yes, but only if it's agreed in writing before the transport begins. Under RHA terms, it's possible to agree increased liability cover, for example, £6,500 per ton, or even full value cover. If it's not agreed in advance, the standard limits apply. Now, an important distinction. Haulier's liability versus cargo insurance. Haulier's liability only covers what the carrier is legally responsible for, up to fixed limits per kilogram. It does not automatically cover the full value of the goods. That's where marine cargo insurance comes in. Marine cargo insurance, also known as shipper's interest insurance, is the shipper's own policy. It covers the full value of the goods, regardless of the haulier's liability limits. Here's a simple example. If electronics worth £10,000 are damaged or lost, the haulier may only be liable for a few pounds per kilo. Without marine cargo insurance, the shipper absorbs the difference. So where do coverage gaps usually arise? Most often between the value of the goods and the liability cap. Other common causes include underinsurance, sublimits for electronics, overnight parking exclusions, and missing value declarations. Multimodal transport can create further gaps. When multiple transport modes are involved or the damaged location is unclear, liability can be reduced even more. Clear documentation and proper tracking are essential. Another growing risk is phantom hauliers. Fraudsters using forged documents can cause serious losses. Without proper verification and documented handovers, claims may not be covered at all. So what should you do if damage occurs? The first 24 hours are critical. Report the damage immediately. Secure evidence. Take photos, save CMR or eCMR documents, preserve GPS and logger data, involve insurers and experts early, and most importantly, do not admit liability prematurely. For high-value goods like electronics, branded items, or pharmaceuticals, claims are examined very closely. Always check overnight parking clauses and policy sublimits. Who needs which insurance? If you operate vehicles over 3.5 tons, you must hold a valid operator's license. To maintain it, you must demonstrate financial standing, which in practice requires a strong goods in transit insurance policy. For vehicles under 3.5 tons, insurance may not be legally required, but it's strongly recommended. One uninsured claim can be financially devastating. Freight forwarders need freight forwarders' liability insurance. Shippers and principals need their own marine cargo insurance. Do not rely solely on haulier liability. Statutory limits are rarely enough for high-value or lightweight goods. Our recommendation is simple. Know your liability limits. Review your insurance policies regularly and document every movement properly. That's how you close the gap between liability caps and real financial losses before it becomes expensive. If this helped, like the video, share it with your team, and subscribe for more.
DAGO Express.